Good, sir.
Well, sir.
Yes. So preparing full swing, costing. Yes or no?
Yes, sir.
No, huh? Huh?
Yes,
Preparing
sir.
or not? Preparing. Pakka.
Yes,
We're
sir.
celebrating for New Year. Huh?
Preparing, sir.
Preparing, huh? You're celebrating with preparation, huh? Yes?
Yes, sir.
Everyone? All right. Whoever is in the class, please keep the videos on, everybody. Okay. All right. So we completed with the analysis of the subject introduction, right? We went through the paper, the approach. After that, we did material chapter and employee cost chapter. Okay. So today we'll be targeting to close overheads, ABC, service costing, and marginal costing. These are the portions we have completed, correct? So two more chapters are pending: joint products and budgetary control, which will be do covering it up in the R2R session, not R2R, R2C session. R2C session will be covering it up once it is done in the regular course. Okay. All right. So, but majority of the portions is actually done. Okay. All right. Yes, videos on everybody. Gautami, are you there? Spurti, Smita, Kiran, Sangeeta, everybody. Yes. What is element-wise classification of cost? Material, labor, and
Expenses.
expenses. Correct or not? Material, labor, and expenses. Material chapter we completed. Employee cost we have completed. So normally, material you have direct material, indirect material. Labor or employee cost you have direct labor, indirect labor, direct wages, indirect wages, and expenses also you have direct expenses, indirect expenses. All direct expense, direct cost, that is direct material, direct labor, direct expenses put together is called as what?
Prime cost.
Prime cost.
Prime
Clear?
cost.
All the indirect expenses, aggregate of all indirect cost, indirect material, indirect wages, and indirect cost put together, indirect expenses put together is called as what?
Overhead.
Overheads. Right? Overheads is nothing but the aggregate of all your indirect costs, right? Indirect material, indirect labor, and indirect expenses. It's also called as on cost, supplementary cost, non-productive cost, indirect cost, etc. Is it clear? Yes, everybody? Now, overheads are classified based on functional classification, behavioral classification. Functional classification, I told you, is always based on what? When I say function, what should you recall? What should you recall? Functional classification?
Cost sheet.
Cost
Cost
sheet.
sheet, and yes or no? The cost sheet approach, correct? Factory overheads, administration overheads, S&D overheads, research and development overheads, etc. Based on function, when you classify, it's called functional classification. Next comes behavior-based classification of overheads. Yes, that is variable overheads, fixed overheads, and semi-variable overheads. Clear? Fixed cost remains fixed in total. Fixed cost remains fixed in total. Variable cost varies
In total.
in total. Both of them total. Clear, all of you? Varies in total. Variable cost remains fixed per unit. Remains fixed per unit. Fixed cost varies per unit. Is it clear? Yes. All right. The formula for calculating semi-variable overheads is what? Change in overheads divided by change in units. Change in overhead divided by change in units. Clear, all of you? Right? This formula gives you the variable overheads per unit. This gives you the variable overheads per unit. When you multiply into the number of units, you get the total variable cost. Total cost minus total variable cost will give you fixed cost. Total cost minus total variable cost will give you fixed cost. Is it clear? Yes? All right. So overheads, right, is indirect in nature. That means that it cannot be easily traced to a particular product in an economically feasible manner. Did you all understand? In an economically feasible manner, you cannot directly trace it to a product. Yes. So indirect, so all the overheads has to be charged ultimately to what? All the overheads has to be charged ultimately to what? Ultimately, overheads have to be charged to what?
Good units.
Ultimately, it has to be charged to the good units. Yes or no, everybody? Correct? It has to be charged to good units. Now, based on traditional approach. Traditional absorption costing method. Traditional absorption costing method. We departmentalize the overheads. We departmentalize the overheads. Primary, that is the production department, yes, and the service department. Production department and service department. Clear, all of you? Yes. In production department, all the aggregate, you say there are three production departments, P1, P2, P3, and two service departments, S1 and S2. Clear, all of you? Yes. So first, all the overheads, you remember, put in the main bucket, right? You pour everything to a main bucket, and then you have smaller buckets which represents each of the departments, which represents each of the department. So first target is to ensure that you fill the bucket first. How do you fill the bucket? You identify the costs, right? You identify which are the costs, and you collect all the overheads, collection of all the overheads. Is it clear? After that, you start pouring it to each of the department buckets. Understood, all of you? P1, P2, P3, S1 and S2. For this, you will follow two processes. One is allocation.
Allocation and
Second is apportionment. Very good. Allocation and apportionment. Right? Allocation means what? If you can directly identify to the department, I didn't say product. If it is to a product, then it becomes direct cost. Artha ita difference. If it is to a product, if you can allocate it to a particular product, it becomes direct cost. It's not indirect cost. But all the overheads cannot be identified with a particular product. Is it clear? But it may be identifiable with a particular department. Maybe. If it can, whichever cost can be identified with a particular department, you will allocate it. Artha. Yes, all of you, you will allocate. The allocation is the process of charging the overheads, right? Which can be identified with a particular department, directly identifiable with a particular department. Is it clear? So first you allocate, then the remaining overheads after location. That means these are the overheads where you cannot directly identify to a particular department, right? For example, rent. Yes, rent may be charged on a reasonable basis. What is the reasonable basis? Square feet area. Square feet area. Did you all understand? Yes. Therefore, this may be charged to the particular department based on a reasonable basis. This process is called apportionment. So after allocation and apportionment, main bucket, nothing. Main bucket empty. Is it clear? Main bucket is empty. Yes. Now you have water in all the smaller buckets, which are my department loads. Units produced, is it in production department or service department? Units produced.
production.
It's in the
Production.
production. I told you ultimate objective is to absorb the cost in or absorb the overheads in the units, good units produced. Correct or not? Therefore, service department overheads has to be redistributed to my production department overheads. The first process of apportionment and allocation, you call allocation and apportionment, you call it as primary distribution. Right? Where from the main bucket, it has been put to all the individual departments, including service department. Now, when you redistribute it from service department to the production department, this process is called as what? Secondary distribution. This is called a secondary distribution. Clear, all of you? After secondary distribution, ultimately it is absorbed by the units produced. Therefore, that is absorption. Did you all understand? Yes? Did you all understand? Now, for secondary redistribution, there are different methods. Direct redistribution method. Direct redistribution means what? Yes, it assumes that, right, there is no reciprocal of services, right? That is, X, say service department X is providing services only to production departments and not to Y, which is Y is also service department. Understood? Say X is a service department and Y is a service department. We assume that X will provide only to production departments and not to Y. We also assume that Y will provide services only to the production departments and not to X. Is it clear? In such a case, you can follow direct redistribution method. Clear, all of you? Yes. Next comes step ladder method. That is non-reciprocal services. That means, say one department provides to the other, but there is no reciprocal of service. X provides to Y, but Y does not provide any service to X. Clear? This is also called as step ladder method. Step ladder method. Then there is reciprocal method. That means X is providing to Y, Y is also providing to X. Is it clear, all of you? Right? In my example, if you remember, stores department and canteen department. If canteen department employees are stores department is providing raw material supply to canteen department, and and stores department employees are going to the canteen department and eating, that means both are providing services to each other. Is it clear, all of you? Yes. In such a case, there are three methods. First one is what? Repeated distribution method. Repeated distribution method. Yes. Where first you take one department and distribute it amongst all the departments, make it zero. Is it clear? So you take one bucket, X bucket, and you pour the water in all the buckets other than X. Other than X. Is it clear? Because a department cannot provide services to itself. That you cannot consider. A department, for example, timekeeping department is there. In that, say they have not given you the percentage of utilization of service. Say they have not given in the question percentage of utilization of service. Who's in the class should keep the video on. Yes. Now, and you are supposed to calculate. For timekeeping department, can I consider number of employees as the basis for calculating the percentage of utilization of service? Yes or no?
Yes, sir.
Yes. Number of employees they've given for all departments, including timekeeping department. Now, in such a case, will you include such employees for the purpose of calculation? Tell me. Will you include the timekeeping department employees? Yes or no? Will you include the timekeeping department employees in your calculation? Yes or no? What do you think? You're supposed to identify what is the percentage of service of timekeeping department provided to all the departments. Clear? Right? They would have given you number of employees. Say P1 department 10 employees, P2 10, P3 10. Artha agta idea? Right? At even timekeeping department, say it is 10. Canteen department 10. Artha aita? So total 50. Total 50. Now I am saying, will you consider total as 50 employees or 40 employees?
40.
40 employees. Include employees of timekeeping department. Is it clear? There is a problem. We have done this adjustment in the class.
Yes, sir.
Yes, because you cannot provide services to itself. Otherwise, it is a never-ending saga. Okay, so that you should not consider. Next. Now, in repeated distribution method, first we will ensure that, because I will not be able to solve all these problems. Conceptually, I will make you understand and recall the entire process step by step. Step by step. After the class, if you just go through that problem, one problem, you will be able to do it. Clear, all of you? Yes, I cannot solve because that's a lengthy problem. It takes time. So concept you understand. Say service department X you take. Understood? Service department X, you will now apportion it between, distribute it to P1, P2, P3 and Y department. That is service department Y. Clear? Now X is empty. Now Y has existing Y plus addition of X. Y has existing Y plus addition of X. Correct? Now this, after addition of X, whatever the balance is, that you will distribute between P1, P2, P3 and X. Is it clear? And X. So this process you will continue till it becomes 0 in X and Y, and there is cost only in A, B and C left. Is it clear? Yes, this is my repeated distribution method. Next comes simultaneous equation method. Simultaneous equation formula is what? X is equals to existing X plus Y. Existing X plus Y. Y is equals to existing Y plus X. Is it clear? Existing X, Y plus X. Right? Did you all understand? Solve for X and Y. So what you do? Take X, substitute in Y. Or take Y, substitute in X. Is it clear? Then solve for X. Substitute, after you get the X value, substitute in the Y equation and solve for Y. Is it clear, all of you? This is my simultaneous equation method. Are you able to recall? Yes or no?
Yes, sir.
Yes. Simultaneous equation method. Finally, you have trial and error method. Trial and error method is nothing but, in repeated distribution method, only the XY column exactly copy paste. That is my trial and error method. Understood? Right? After that, you'll have your secondary distribution summary table, which will be same in trial and error as well as in simultaneous equation method, as well as separation equal. Here, very important is when you consider the ratio for splitting the service department cost to the production department in secondary distribution summary, you should consider the ratio only of the production departments. You should consider the ratio only of a production departments. You will ignore the ratio of the service departments, if you remember this. Okay, so after today's class, please go through this problems. Understood? Next, when it comes to step ladder method, sit straight all of you. When it comes to step ladder method, you start with the process. That is, you start with the department that is receiving the least service, not providing. That is receiving the least service. Clear all of you? So start with the department that is receiving the least service, then to the next department which is receiving, say, second least services, and then finally to the department that is receiving the maximum services. Understood? So that way you'll go one by one and then you'll solve for X, Y, and Z accordingly. Is it clear? Is this clear to everybody? Yes. So this is the summary of my primary distribution, secondary distribution, and the process of absorption. Clear? Now, if the absorbed overheads is more than the actual overheads, actual overheads, what do I call it as? What do I call it as?
Over-absorption.
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 If the absorbed overheads is less than actual overheads,
Under-absorption.
Under-absorption.
Under absorption.
under absorption. Clear all of you? Now, why does absorption occur? Absorption normally is because of fixed cost. Normally is because of fixed cost of fixed overheads. Is it clear all of you? Why? Because variable cost is fixed per unit. Variable cost is fixed per unit, yes or no? And you are absorbing overheads based on a predetermined overhead rate. You are absorbing overheads based on a predetermined overhead rate, which is fixed per unit. Did you understand? Which is fixed per unit. It could be per hour, per unit, or whatever. Is it clear all of you? Now, when you are absorbing something fixed per unit, variable cost is anyway fixed per unit. Variable overheads is anyway fixed per unit. Therefore, normally over-absorption, under-absorption will not be because of variable overheads. Did you understand? However, fixed overheads, is it fixed per unit? Fixed overheads, is it fixed per unit? No.
No, sir.
But however, you are absorbing based on fixed, overhead per unit. Therefore, it results in over-absorption or under-absorption. Did you understand? Yes. Now, if the concentrate now. First of all, okay, before I go to the next one, how do you calculate the fixed or total fixed overheads or total fixed cost? How do you calculate?
Fixed overhead
Fixed
rate
cost
into
per
budget.
unit into
Budgeted units into fixed overhead per
Budgeted
unit.
units into fixed overhead per unit. Budgeted units into predetermined fixed overhead per unit. Did you understand? Yes, this is how you calculate the total fixed overheads, total actual fixed overheads. The same concept applies in marginal costing, but you say the word cost. That's all. Is it clear? Yes. Now, if the actual production is more than, concentrate, okay, actual production is more than my budgeted production. Actual production is more than budgeted production. Will it result in over absorption or under absorption? If the actual production is more than my normal production or my budgeted production, will it result in over absorption or under absorption?
Over-absorption.
Over absorption, because you're absorbing the overheads based on the units produced. If you're producing more and more units, you're absorbing more and more cost. Clear, all of you? Therefore, if you've absorbed more overheads, it will result in over absorption. Understood, all of you? Now, if there is over absorption, then in your costing P&L, please concentrate now. In your costing P&L, profits would be high or low, overstated or understated. If there is over absorption, profits would be overstated or understated.
understated.
Understated, because over absorption means you're charging more cost to the P&L. Yes or no? You're charging more cost to the P&L, so obviously profits would be understated. Is it clear? Profits would be understated. So accordingly, you need to, when you're doing the absorption overheads problem, there's one problem, right, which is repeatedly asked, which is the supplementary overhead recovery rate. Remember, supplementary overhead recovery rate problem. Yes or no? In that problem, it is important to understand whether costing P&L account is debited or credited. Yes. So in case of over absorption, you would have understated the profits. Therefore, now to rectify it, you will credit P&L or debit P&L. To rectify, you will credit P&L or debit P&L.
Credit.
You will credit the P&L. Is it clear, all of you? Yes. Okay. Supplementary overhead recovery rate. Yes. So they would have given you, say, the number of hours. Based on that, you calculate total absorbed overheads. Then you calculate what is the over absorption, under absorption. Understood, all of you? That over absorption, under absorption, you will allocate between, that is, you will apportion it between units produced, units sold, right? Closing stock, finished goods, WIP, all of this. Is it understood, all of you? Then divided by the total units produced, divided by total units produced, you get the supplementary overhead recovery rate that you multiply into the respective units of units sold, then closing stock of finished goods and WIP, etc. Understood, all of you? That is how you get to know which ledger account you should debit and which one to credit. Clear? So this is the concept of over-absorption and under-absorption. Absorption of overheads could be based on a lot of factors, right? It could be based on my machine hours. It could be based on my direct labor. It could be based on the, say, a percentage of prime cost. Is it clear, all of you? Factory overheads absorbed as a percentage of direct wages. Have you seen such adjustments in cost sheet? Correct or not? Yes. So there are different methods in which overheads may be absorbed. Understood? Right? Yes. Next is the concept of machine hour rate. What is the concept? Machine hour rate. Cost of operating a machine per hour. The cost of operating a machine per hour is nothing but machine hour rate. Please remember, we are still under overhead chapter. So only overhead has to be considered. In this, you have to segregate the cost as fixed cost and your variable costs. Fixed costs and variable costs. Is it clear, all of you? Yes, based on that, you write down what's the total fixed cost and then find out the per unit cost, all the variable costs, per unit variable cost, total the fixed total amounts of fixed cost and variable cost as well as the per unit cost. That is the normal formula. In this, there are two types. One is basic machine hour rate, one is comprehensive machine hour rate. Yes, basic machine hour rate, comprehensive machine hour rate. Now, basic machine hour rate is that machine hour rate which excludes the operators wages. Yes, the operators wages. Is it clear, all of you? When you add the operators wages, it becomes comprehensive machine hour rate. Is it clear?
Yes, sir.
Machine operators wages, when you add, it becomes comprehensive machine hour rate. Yes. So these were the simple concept of overheads. Yes. What is overheads? You have to understand the classification of overheads. Then what is absorption? So first primary distribution, secondary distribution. Then what is absorption? What is over-absorption? What is under-absorption? What is the treatment of over-absorption and under-absorption? What is the impact it has on the P&L? And finally, what is machine hour rate? What are the different types of machine hour rates? Simple concepts are here. Is it clear? Yes.
Yes,
Okay.
sir.
Shall we go to the caps material? Open your caps material theory. Yes, ma. Read.
Overheads and absorption costing. Overheads equals on cost equals indirect cost equals supplementary cost equals non-productive cost. Classification of overheads. Overheads divided into two. Function-wise classification that are factory overheads, administration overhead, selling and distribution overhead, research and development overheads. Behavior-wise classification, fixed overheads and fixed overheads, variable overheads, and semi-variable or semi-fixed overheads. Steps
I
involved.
hope you revised the introduction chapter, semi-variable cost. ಆಗಿದೆಯಲ್ಲ ಶೆಟ್ಟಿ ಸರ್ ಮಾಡುವಾಗ. Yes, continue.
Steps involved in distribution of overheads. First, collection and estimation of overheads. Second, primary distribution or departmentalization of overheads. That is distribution of overheads to production and service departments based on allocation and apportionment. Third, secondary distribution, process of reapportionment or redistribution of service center overheads to production department. Fourth, absorption. Methods of reappointment of service department expenses over production department. Direct redistribution method.
Reapportionment. Yes, continue.
First, direct redistribution method, step method or non-reciprocal method, reciprocal service method. Techniques of absorption formulae are as under. Rate per unit, total overhead divided by total number of units. Percentage of material, total overheads divided by direct material into 100. Percentage of labor, total overhead divided by direct labor into 100. Percentage of prime cost, total overhead divided by prime cost into 100. Labor hour rate, total overhead divided by direct labor hour. Machine hour rate, total overhead divided by direct machine hours. Machine hour rate means cost of running a machine per hour. Basic or simple machine hour rate shall not include machine operators' wages. Comprehensive machine hour rate, machine operators' wages will be added. Steps to be followed for computing MHR, machine hour rate. Compute effective machine hours for the period. Identify and aggregate all fixed overheads and not fixed
ಅಲ್ಲಿ
cost, unlike
compute
in the case
effective,
of.
yeah, one sec. Ali compute effective machine hours pakka barili. We'll put an arrow mark for that and out. Exclude abnormal, exclude abnormal hours. Exclude abnormal hours. All abnormal hours should be excluded for calculating effective machine hours. Sorry, Ali abnormal hours. Ali, actually, okay, do one thing. I will explain it in the notes when you're doing problems. Problems and action one thing. Continue. Sorry.
Identify and aggregate all fixed overheads, that is, and not fixed cost, unlike in the case of operating costing. Compute fixed overhead per machine hour on total basis. Identify variable overhead. Ascertain MHR for each variable overhead, that is normally variable overhead, power, depreciation, repairs and maintenance. Aggregate per unit overhead equals basic machine hour rate. Add operators wages equals comprehensive machine hour rate. Over and under absorption of overheads. Over absorption, it means absorbed overheads are more than the actual overheads. Under absorption, it means absorbed overheads are less than the actual overheads. Accounting treatment for under or over absorption, directly transfer to P&L account, transfer initially to overhead adjustment account, and at the end of the period, the net balance to costing P&L account, charge to production based on supplementary overhead recovery rate, and carry to the subsequent period for adjusting, and at the end of the year transfer the balance to costing P&L account. Overhead absorption rate, amount of overhead incurred divided by basic absorption. Predetermined overhead rate, budgeted overhead for the period divided by budgeted basis for the period. Blanket overhead rate, overhead cost for the entire factory for the period divided by base for the period, that is total labor hours, total machine hours, etc. Multiple overhead rate, overhead allocated or apportioned to each department divided by corresponding base. Variable portion in semi-variable overhead, change in amount of expense divided by change in activity or quantity. Depreciation, calculated in two types, useful life, that is fixed, hours, that is variable.
Not just hours. It is based on any variable this thing. So that is useful life and time on the brain. Time. For that, if it is based on time, it is fixed. If it is based on running life, running life, it is variable. Variable. Clear? Albaridika. Example. Ali effective machine hours, no? Refer notes you write. Refer notes. Refer notes. Yes, open your notebook and write down overheads and under that effective hours. Effective hours. Effective hours. 1,000 hours. 1,000 hours. 1,000 hours. 1,000 machine hours in a month. 1,000 machine hours in a month. 1,000 machine hours in a month. This includes 50 hours of normal 50 hours of normal maintenance time. This includes 50 hours of normal maintenance time and 100 hours and 100 hours and 100 hours of abnormal breakdown time of abnormal breakdown time of abnormal breakdown time. Total cost or total overheads of operating the machine Total overheads of operating the machine in a month is in the month is equals to 10,000, 10,000, 10,000. Below that, write down. Effective machine hour is equals to 1,000 minus 50. 1,000 minus 50. Yes, normal hours is charged to good units. Normal hours is charged to good units. 1,000 minus 50 is equals to 950. 950. Write down. 950 hours. For that 950 hours, draw two arrow marks. Two arrow marks. Two arrow marks. 900 hours. 900 hours. And right side. 50 hours. 50 hours. Right side 50 hours. And left side 900 hours. Right? Is equals to 900 hours. And right side 50 hours ಇದೆಯಲ್ಲ. Sorry, right 50 ಅಲ್ಲ. How much was it? Breakdown time? Sorry, mistake ಮಾಡಿದೆ.
100.
100,
was
sorry.
100.
Either ಇಲ್ಲಿ 850 and 100. Please make it 850 and 100. Sorry. Please make it 850 and 100. Clear all of you? Therefore, so ಇಲ್ಲಿ 850 ಕೆಳಗಡೆ, did we calculate the machine hour rate above? No. Below the chart you write down machine hour rate is equals to 10,000 divided by 950. 950. Yes, how much? 10,000 divided by 950, how much?
10.5.
10.5.
10.5. Write down 10.4 decimal 4 decimal.
10.5263.
10.5263. 10.5263. Okay. Alliga for 850 below that 850 into 10.5263. 850 into 10.5263. Yes, how much?
8,947.
8,947.335.
Yes. Write down.
355.
Yeah, whatever. 8,947 something. Okay. Write that down there. The balancing figure 10,000 minus this figure on the right hand side. 10,000 minus this figure on the right hand side. 10,000.
1,052.645.
Okay. So our left hand side you write down charge to good units. Charge to good units. Right hand side, where will this go?
Costing P&L account.
Costing P&L account. Abnormal cost, abnormal overheads, charge to costing P&L account. Abnormal overheads, charge to costing P&L account. Is it clear, all of you? Yes. So only in the please write refer notes anta because I couldn't explain this there. Adike refer notes best. All right. Now come to your revision material problems. Yes, overheads. Okay, look at this problem. So Divit Electronics manufactures three types of home appliances. The management notes that the plant has an installed capacity. See, capacity problem. I have done this, discussed this in the class. What is installed capacity? What is practical capacity? Based on that, the management notes that the plant has an installed capacity of 50,000. Okay, per product per year. Because of preventive maintenance, setup time, holidays, and training sessions, the plant can only produce 45,000 products per product annually. Over the past year, the average output per product has been 42,000 units. while unexpected machine breakdowns reduce the actual output to 40,500 units. Define and identify the installed practical, normal, and actual capacities of the plant. Yes. So, installed capacity or theoretical rated capacity is my total capacity. What is that? 50,000 units given in the question. Is it clear? That's my installed capacity. Practical capacity is that 45,000 units, right? Whereas now, because of the normal breakdown time, whatever that is preventive setup time, holidays, training sessions, they are normal. If I remove whatever that comes from, that is my 45,000 units. Yes. So it is here. It is defined as the actually utilized capacity of a plant after considering only planned losses. That is my normal losses. Did you understand? Planned, not my unplanned ones. That is 45,000 units. The normal capacity over the past year, average output. This is based on my actual average, right? So normal is the volume of production of services achieved or achievable on an average over a period of normal circumstance. That is 42,000 units. The actual capacity is after minusing even abnormal. Is it clear, all of you? Yes. So these are the different capacities. Now look at this. Such kind of questions you should always master so that you get full marks. Yes. So either 4 marks, half mark each you get. Show the basis of apportionment of following up overhead cost. Lighting and heating. Yes. Fire precaution services. So lighting and heating. Lighting could be based on number of units, but heating ಕೊಟ್ಟಿದ್ದಾರೆ. That is conditioning ಅಂತಿದೆ. So it could be based on the floor area because fire precaution service and all both are there, right? Fire precaution service, so floor area. Next, timekeeping, that is number of the employees, holiday pay and ESI and PF contribution. Again, it will be based on my wages. General overheads, right? General overheads normally it could be machine hour rate, direct labor hour rate, all of these things. Then depreciation of plant and machinery, again based on the capital value. Insurance of stock. Insurance of stock is not capital value. Insurance of my stock value ಮೇಲೆ ಇರಬೇಕು, not capital values. Insurance of stock is not based on capital value. It will be based on the value of the stock. Okay. Power steam consumption, technical estimates. Then internal transport is given. Then managerial salaries. Lighting expenses, number of light points. Electric power, machine operation, that is horsepower of machines. This is my over-absorption, under-absorption problem. The cost variance report was being discussed at a review meeting wherein cost accountant of the company reported under-absorption of production overheads. The following information was available from the cost records of the company at the end of financial year 23-24. Actual production overheads incurred were, my actual was 4,50,000, which included 42,000 on account of return of obsolete stores. So obviously this is abnormal, it has to be reduced. Clear? 4,50,000 minus 42,000 has to be done. Then 18,000 units were produced during the year, out of which 10,000 units were sold and 8,000 units of the finished goods were in stock. So 18,000 units produced, then units sold, cost of units sold. For that you have to use 10,000 units and finally 8,000 units were in stock. There are also 5,000 units in progress which may be reckoned as 40% complete. Did you understand? 40% complete. The actual machine hours worked during the period were 43,000. AVS Limited absorbed production at a predetermined overhead rate of rupees 8 per machine hour. Therefore, you have to multiply 43,000 into 8. Is it clear, all of you? You have to multiply 43,000 into 8 to get my absorbed overheads. Yes, absorbed overheads. From this, you have to minus 4,50,000 minus 42. Yes. On investigation, it has been found that 20% of the under absorption, that means 4,50,000 minus 42, 4,08,000, 4,08,000 minus 43,000 into 8. Whatever figure we get, other than 20% is because of defective planning, because of your planning mistakes. So that you have to minus the balance what you get, that is my effect under absorption. Okay. So total productions actually incurred, I told you 4,50,000 minus 42, 4,08,000. Then 43 into 8, you're getting 44,000, 64,000. From this minus 20%. Okay. From this 64, we will normally minus 20%. So that's what is done here. So 12,800 is because of defective planning. This 51,200 should be used for calculating my supplementary rate. Did you all understand? This 51,200 should be used for calculating supplementary rate. My supplementary rate, you should find out equivalent units. Equivalent units, that is 18,000 plus 40% of the units produced, that is 5,000 units. 5,000 units other to 40%. Did you all understand? So 2,000 plus 8,000 plus 10,000, 20,000. 51,200 divided by 20,000, you get 2.56. 2.56 you multiply into the respective numbers. You get this. Then you have to pass the entry. Is it clear, all of you? Yes. Again, a frequently asked question. Then suggest any one basis of reapportionment of service department overheads over production department in the following circumstances. The following instances: maintenance and repair shop, right? Then hospital and dispensary, fire protection, stores department, transport department, computer section, powerhouse, electric power cost, inspection, tool room, and timekeeping. All of this again very simple. Maintenance, it could be based on my machine hours. Yes. So you see here, look at this machine hours. Then hospital number of beds. Okay, hospital and dispensary. Okay, they have told number of employees. Yes, sorry, number of employees. Overheads, number of employees. Fire protection based on the capital values. Stores department, number of requisitions, weight, value of materials issued. Transport department based on the truck hours, truck mileage, and all of this. Computer section, computer hours. Powerhouse, horsepower of this thing. Then inspection hours. Tool room based on my direct labor hours, machine hours. Timekeeping based on number of employees. Simple. Okay. Yes, this is my prime distribution, second distribution problem. This is important, all of you. With the aid of robot and without the aid of robot, please remember that whether it is with or without, yes, the total cost has to be absorbed by all the hours, yes or no? The total cost, which is not specific, say for example, rent. Rent has to be absorbed by all, yes or no? Rent has to be absorbed by all, right? So first find out
Yes.
the total overheads. Okay. So this is what they do. Total idala. Yes. Total overheads of machine per month, rent, right? It is 6,000, 16,000, 20,000, 42,000, right? This 42,000 should be divided by, look at this, 42,000 divided by my total hours. How did I get total hours? 3,500 hours. Yes, here 1,000 plus 500 plus 400 plus 400 plus 1,200. Is it clear? 1,500 plus 2,000, 3,500. This is what is important. 42,000 will be divided by 3,500. Only the cost specific to robot will be divided by the number of. So that is 2,000 hours. So illy there will be. Look at this. This 69,000 is only with respect to the robot. Therefore, 69,000 will be divided by. Sorry, 45,000. Sorry, 45,000 is specific only for the robot. That is added, and normal 42,000 by 3,500 into 2,000 hours. So this 42,000 is charged for both. 45,000 only will be with respect to robot. This is that important adjustment you should remember. Did you all? Are you able to recall now? Yes, this problem again. This has been asked a couple of times in the exam. Okay, this is based on cost sheet. Based on cost sheet. Clear? Yes. Equation. That's it. So these are the different types of problems we get in overheads. Okay. Yes, look at this. So, Bright Appliances Limited is a leading manufacturer of smart home devices such as Smart Cool AC, Power Light Inverter, and Eco Dryer. Now, amid increasing operational complexities, the company's finance controller has initiated a review of overhead allocations to gain better control over departmental efficiency and product profitability. The company operates through four major departments: production, handles manufacturing across three plants using advanced machinery, including stores management, administration, sales, distribution, then general management, right? Administration supports HR, finance, legal, and compliance. Okay. Production handles manufacturing, then sales and distribution, retail tie-ups, e-commerce, logistics. General management oversees strategy, innovation, and exclusive level operation, executive level operations. Now, the extract from the budget for the next financial year is as follows. So this is budgeted. It is budgeted, right? Raw material cost budgeted is given. Okay, notes consumed in a ratio of 3 is to 4 is to 3 for the three products. Indirect material cost, they have again given you manufacturing is how much, in that stores is how much, general admin how much, personnel how much, sales how much, salary and wages again apportionment, then this apportionment, all of this is given. Clear all of you? Yes, additional information, employee count they have given. So production department, admin department, selling, sales and distribution. Now observe all of you. Yes, wherever they've given number of employees based on employees. So manufacturing, stores, general, personnel, right? This is my 45,000. For this again they've given you the ratio there. Okay. Salary and wages includes direct wages of 1 lakh, 1 crore 60. Again they've given you these data. ಅರ್ಥ ಆಗ್ತಿದೆ ನಿಮ್ಗೆ? Yes, production department how much, admin how much, selling and distribution how much, then production, admin, selling and distribution, general management how much, floor area how much, AC tonnage how much, depreciation rates is given. Department roles, general management will be 70%, sales strategy, sorry, general management other 70% is sales strategy, sales strategy, 20% is production, 10% is admin, right? Admin is 50% production, 50% sales. Required prepare a schedule of cost allocation, that is my primary distribution for production department, administration department, sales and distribution department, and general management. Prepare a schedule of cost apportionment, primary distribution for production department, administration department, sales and distribution department, and general management. ಅರ್ಥ ಆಗ್ತಾ ಇದೆಯಾ? So first you do a primary distribution, right? Sorry, that is first you do a cost primary distribution, then you do based on cost allocation, then you do cost apportionment. Is it clear? For that they have asked different tables. Prepare a schedule of secondary distribution of administration department and general management costs. Okay, now mark this problem as important because it's a little different. Yes, this is your latest RTP. Yes. Now you keep the question open. You keep the question open and compare. Keep the question open in your book and you please compare this. Yes. Schedule cost allocation among the departments. Raw material cost, can it be allocated directly to production department? Yes or no?
Yes, sir.
Yes,
Yes.
yes.
Indirect material cost. Yes. Wait 1 second. I will open this thing in another tab. Just 1 second so that we can quickly correlate. So Yes. Yeah, look at this now. So indirect material cost 12,50,000. Indirect material cost 12,50,000. Production, administration, selling and distribution. So manufacturing is production department, right? So that has come here. Is it clear, all of you? Then your sales of 30,000. That is related to selling and distribution, right?
Sir.
Yes or no?
Yes,
Yes,
sir.
sir.
Yes, that has come here. And the balance gone to administration department. Is it clear? Stores and general administration, right? So total is 12 lakh 50. Idhe tara, the first table in the allocation is done. Is it clear, all of you? Did you all
Yes.
understand? Don't get scared looking at the question because it's lengthy. Yes, based on that, allocation is done. Is it clear? Next comes
Yes.
apportionment. Next comes apportionment. So first allocated cost. This is based on primary distribution, correct? Then comes my apportionment, salary and wages. So here they have not given you the breakup. Can you see here? Includes direct wages of 1.6. So 4.2 includes that. So 4.2 minus 1.6. Artha aita? Wherever they have not given you the breakup, you cannot do allocation. Do you agree with me or not?
Yes,
Right? So this is based on apportionment. Right? So like that you have to identify wherever they have not given you breakup, it will be based on apportionment. For example, this is based on gross salary. This is apportionment or allocation. Apportionment or allocation, what do you think? Group employee insurance, apportionment or allocation? Ready? Chitralaka, unmute. Yes.
Apportionment.
It
Apportionment.
is apportionment. Did you understand? So salary and wages, again, it is apportioned. Right? Based on what? They have given the ratio down. Right? Average gross salary. Right? So that, and then employee count is given. So where is the, yes, it is apportioned based on that ratio. Is it clear? Yes. So based on the average gross salary, the sales salary has been apportioned. Next, floor area, rent and property tax based on floor area. Depreciation, you know the value. For building, it's based on floor area they have taken. AC based on the tonnage, what they have taken. That. Group employee insurance, again based on salary. Then electricity expenses units they've given. Meal coupon, this is based on number of employees. Yes. Miscellaneous expenditure, direct expenses as a ratio of direct expenses. Clear, all of you? Then comes secondary distribution. Right? Schedule of secondary distribution is done here. Again, for that, department roles they have given here. Did you understand the percentages? Did you understand the percentages, all of you? Yes or no? General management 70% and all that. So that is again 70%, then 10 and 20. Can you see this? 70, 20, 10. Yes, that has been used here. That has been used here. So allocated and apportioned overheads, then use this for secondary distribution. Understood? Repeated distribution method is used here. Yes, so 5946, then that is minus here and then it is distributed. Clear? Okay, so only thing is you'll get scared looking at the lengthy question, but otherwise it is straightforward. Not much logic there. Not much logic. Just that it is lengthy. So you get lost in the problem. Clear, all of you? Yes? Alright. So with that, we've completed overheads chapter. Now, what are the flaws of overheads? All overheads is being absorbed based on a predetermined overhead rate. Is it clear, all of you? If you remember my machine hour rate, all the overheads were being absorbed, right? All the cost, all my overheads absorbed based on machine hours. Did you understand? Yes, but how right is it for me to absorb everything based on machine hours or everything based on direct labor hours? Now, for example, say there are two products A and B. Clear, all of you? Say there are two products A and B. A requires a lot of machine hours. B requires less machine hours. A requires lot of machine hours. B requires less machine hours. Is it clear? Yes. Now, but however, A requires, I told you, a lot of machine hours. However, A is not very labor intensive. That means it may not require a lot of labor. Also, it may not require a lot of transactions. Clear all of you? It may not require a lot of transactions, but B is transaction heavy. Is transaction heavy. That means it has a lot of transactions happening on a day-to-day basis. Therefore, lot of purchase orders, lot of material requisition notes, lot of issues, lot of receipts. Clear? When there are a lot of purchase orders, receipts, issues, etc., store cost would be more towards B or A. Store cost would be more towards B or A. What do you think?
B.
B. Yes, but however, based on machine hours, if you have absorbed the store cost, you would have charged it more to A or B.
A.
A, right? Therefore, now do you see the disparity here? Yes or no? To correct this gap, right? To correct this, next method was developed, that is my activity-based costing method. In ABC, the overheads are absorbed. Please understand, ABC is again for overheads only, not for my direct cost, not for direct cost. Overheads are absorbed based on activities. Overheads are charged to activities and absorbed based on my activities. Is it clear, all of you? Here you identify an activity cost pool. So find out what are the activities, find out what the cost pools are, then determine what are the cost drivers. What do I mean by cost drivers? Those factors that drive that particular cost. Is it clear, all of you? For example, just now example what I told, say stores. Store cost could be based on number of store acquisitions. Did you understand? That is my cost driver. Then find out what is the cost per cost driver. Cost per cost driver. So ABC is nothing but D, M and A. Divide, multiply and add. First find out what is the cost per cost driver. Divide. Is it clear? Yes. Then you have different products. For each of the product, you would have had, say, A, B, and C is there. Understood? A, B, and C. For A, 10 requisition, store requisition. For B, say 5 store requisition. For C, say another 7 store requisition. So multiply this into 10, into 5, and into 7. Is it clear? That is multiplication. And then you add. Simple. That is my DMA. This is nothing but activity-based costing. Understood, all of you? Yes, in this there are different types of or levels of activities. Yes, different levels of activities. First, you have unit level activities. Unit level activities. All those activities that are required at a unit level, I call it as unit level activities. Is it clear, all of you? Yes. Then all the activities which is required for a particular batch, that is called batch level activities. For example, setup. Every time you set up, no, all the cost, setup cost, etc. This will come under batch level activities. Then you have product level activities. For a particular product, whatever is required, that is my product level activities. Say designing of the product, etc. Normally one-time cost. Is it clear, all of you? Then you have facility level activities, maintaining the facility, etc. So from micro you come to macro. Clear, all of you? That way you will very clearly remember what are the different levels of activities. Is it clear? Yes, all of you. Then you have value added activities, non value added activities. Any activity that adds value, no, that's required, that is necessary, that you call it as value added activities. Non value added activities, by eliminating non value added activities, it's not going to have any impact on your cost. It will not have any impact on the process. Such activities can be eliminated if you identify which are value added and which are non value added activities. Is it clear? Now, if you prepare a budget based on this activity costing method, that is called as activity based budgeting. It's called activity based budgeting. Clear, all of you? Yes. Okay. Now, only thing is about identifying what are the activities and then identifying what are the respective cost drivers. That's all. All of that, there's a beautiful table in the material. Let's go through a revision method. Yes. Yes. Yes, Manit.
Activity based costing.
Continue.
Activity-based costing is an accounting methodology that assigns cost to activities rather than product or services. This enables resources and overhead costs to be more accurately assigned to products and services that consume them. Unit level activities, batch level activities, product level activities, and facility level activities are the categories of activities helps to determine the type of activity cost driver required. ABC is very much useful to the organization with multiple product. One of the few weakness of ABC is it is very costly and cannot be applied for all the companies. The use of ABC as a costing tool to manage cost at activity level is known as activity-based cost management, ABM. ABM is a discipline that focuses on the efficient and effective management of activities as the route to continuously improving the value received by customers. ABM utilizes cost information gathered through ABC. The value added activities are those activities which are indispensable in order to complete the process. NVA activity represents work that is not valued by the external or internal customer. NVA activities do not improve or function of a product or service, but they can adversely affect costs and prices. Activity based budgeting is the process of planning and controlling the expected activities for the organization to derive a cost effective budget that meets forecast workload and agreed strategic goals. Key elements of ABP are type of work or activity to be performed, quantity of work or activity to be performed, and cost of work or activity to be performed. ABC, that is activity based costing, use DMA, division, multiplication, and addition technique. A technique of charging overheads to a product based on various activities carried out in the entity. Cost driver, factors which determine the activity contributing to overheads. Cost pool, aggregate of all the costs relatable to each such activity. Total overheads under both absorption costing and ABC have to be same. However, overheads absorbed per unit under these two methods need not be same. Cost drivers. Activity cost pools. Ordering and receiving material cost. Related cost drivers are number of purchase orders. Setting up machine cost. Number of setups. Machining costing. Machine costs. Machine hours. Assembly cost. Number of parts. Quality inspection. Number of inspections. Testing cost. Number of tests. Painting cost. Number of parts. Supervising cost. Direct labor hours. Business functions and their cost drivers, research and development, number of research projects, personal personal hours or personal hours on project, design of products or product services and procedures, number of product in design or number of parts per product or number of engineering hours, customer service, number of service calls or number of product service, hours spent on servicing products, marketing, number of advertisements, number of sales personnel, sales revenue, distribution, number of units distributed, or number of customers. Activity based cost management ABM using ABC to manage cost at activity level. Cost driver analysis, activity analysis, performance analysis. Under activity analysis, value added activities, non value added activities. Performance analysis, there are four: cost reduction, business process re engineering, benchmarking, performance measurement.
Yes. Okay, this all of you. Edward Limited manufactures weighing machines of standard size and sells its product to two industrial customers, namely MT Limited and KG Limited, and to a dealer, MG Bros. So, three of them. Having shops in different cities, the maximum retail price per unit of weighing machine is rupees 11,000, and per unit average cost of production is 5,500. 40% is general fixed overhead cost. So in this, 40% is fixed overheads. Did you understand? Of the 5,400, 500, 40% general fixed. The finance officer has been asked to undertake a customer profitability analysis and calculate and compare the profit margin per customer before deducting general fixed overhead to know about the real customer profitability. Following are the additional overhead information. Delivery cost rupees 200 per kilometer. Emergency delivery cost, that means cost per driver is already given for you. Right? Order processing cost, specific discount and sales commission, then advertisement cost. Following data are available for each customer. Sales units, total number of kilometers traveled, delivery kilometer traveled. Look at this. So number they've given, number of cost drivers, also cost per cost driver. Did you understand? Can't get easier than this. It cannot get easier than this. No number of emergency delivery, number of orders processed, specific discount, percentage of sales revenue, sales commission, percentage of sales revenue, advertisement cost is given. You're required to analyze the profitability of each customer, which customer is most profitable. Yes. Yes, look at this. Sales in units given into the selling price, you get sales revenue, right? Then average variable cost, they've given 40% cost. Remember, all of you here, 40%, right? Here, 40% is general fixed overheads cost, right? So other than fixed cost, so variable cost is 60%. Is it clear? 3,300 per unit into number of units, you will get the variable cost. Balance is contribution. From that, you minus all the administration overheads, additional overheads. How will you calculate? Based on the 200 rupees per kilometer into the number of kilometers traveled. Is it clear, all of you? 1,800 and 900. You multiply that, you get the delivery cost. Emergency delivery cost, all of the same thing you have to multiply. Is it clear? Specific discount, sales commission, advertisement cost, all of it when you add, then profit per customer. That is before deducting general fixed overhead cost is arrived. Clear, all of you? Yes. Okay. One more problem, simple problem, just go through. Yes. Activity based costing. Look at this. Whether we would recommend activity based costing or not, this question. Company K produces one product. The overhead cost mainly consists of depreciation. Overhead is mainly depreciation. Do you think ABC is suggested? Tell me. Don't look at the answer. What do you think?
No, sir.
Yeah. Yes. Next. Company L produces 5 different products using different production facilities. Production facility means it is a different production department. In ABC, do we use departmentalization of overheads? In ABC, do we use departmentalization? No. So it does not bother us whether the production facilities are different or not. As long as there are multiple products, is ABC suggested? Yes or no? Yes.
Yes, sir.
A consultancy firm consists of lawyers, accountants, and computer engineers. Provides management consultancy services. So for services, can I use ABC? Yes, I can use if required. Did you understand? company S produces two different labor intensive products. Labor incentive, the contribution per unit in both products is very high, right? Contribution per unit in both products is very high. The break even point is very low. That means fixed cost. What is happening? If the break even point is low, that means fixed cost is low or high?
Low.
Fixed cost is low or high? Huh? Ready? Fixed cost is low or high? If the break even point is low, fixed cost also will be low. Yes or no? All the work is carried on efficiently to meet the target cost. So anyway, everything is there, right? So it is. Why should you then unnecessarily burden it? Clear, all of you? It is anyway labor intensive. Labor intensive, the direct labors you can use. So S produces two different labor intensive products, high unit contribution and efficient operations. Different products, but labor intensive. Hence overhead allocation based on readily traceable direct labor cost. That's what I told. Direct labor hours will be sufficient. Is it clear? This one is yeah. Okay, I think you can go through the other problems. Okay. Only thing you have to divide, multiply, and add. That are simple things. Clear, all of you? Go through the go through all the other problems. More or less they are repetitive in nature. More or less ABC problems are little repetitive in nature. Go through it. Only any important adjustments you mark. Okay. Two comprehensive problems you solve so that you get the hang of it, and the others you can go through and mark all the important adjustments. Is it clear, all of you?
Yes, sir.
Yes.
Yes.
So, sir, in examination, be careful. Read the question. Don't straight away reject ABC. Don't straight away reject ABC. In couple of earlier attempts, ABC was actually very simple and less time consuming. Okay, but why? What happened? Everybody thought ABC means lengthy. I'll skip. Don't do that. Read the question. Analyze whether it's lengthy or not. Did you understand, sir? When will it be lengthy? When will it be lengthy? Say cost per driver. Cost driver rate not given. You have to divide and there are multiple activities. Clear, all of you? So first you have to identify cost pool, then divide it and then multiply it and then again add it. If you have 4 5 tables coming, lengthy tables, it will be lengthy. Did you understand, sir? How will I get to know? Practice. Go through all the questions, you'll understand. When you read the question, you should be able to identify whether it's a lengthy question or not. Is it clear? If it's a lengthy question, then I would suggest you to skip ABC. If it's a lengthy question, I would suggest you to skip ABC to save time. Is it clear? Is this clear, all of? Yes. Yes. Otherwise, don't blindly reject it because sometimes it is very simple. Normally, ABC problems are simple. And sometimes it is short also. In such a case, it's a bumper. You can do that problem. So be careful. Okay. Don't straight away this. Yes, many a times it is lengthy. Is it understood? Yes, but if your preparation is not good and if you're not confident on other questions, then you may have to solve ABC. So you can definitely not skip it. At the same time, you cannot read it. You need to solve at least two comprehensive problems now. Now I'm saying for your Sunday mock exam, mock test. Is it clear? At least two comprehensive, lengthy ones you solve so that you get a hang of it. Clear, all of you? Yes.
Yes.
Then you can go through all the important adjustments and mark it. And I told you the flow. You cannot miss what is done in the class. What is done in the class, that is the most important. All right. So with that, we have completed ABC. Yes. Two more chapters. First one, the last but one, service costing. Service costing. Sit straight, all of you. The cost of operating a service is nothing but my service cost statement. The cost of operating a service is nothing but my service cost statement. Clear, all of you? I also call it as operating costing. Operating. What is operating? Service costing. What is operation?
Process cost.
In your process costing. Multiple operations make one process. Multiple processes leads to a product. Clear, all of you? Yes. In this, the most important thing in service costing is the units. The units. Is it clear? You have simple units and composite units. Simple units and composite units. When unit of measurement is one. When you have one unit of measurement, I call it a simple unit. Say kg, kilometer, liter, right? All of this is my simple unit. However, if you have more than one unit of measurement, it's called as composite unit. Composite unit. Clear, all of you? Yes. For example, passenger kilometers ton kilometers, space, room days, room nights. All of these are my composite units. Is it clear? Yes. Now there are two ways to calculate this. Yes. One is using my simple average basis and then is my weighted average basis. Yes. All of this. That's all there is. And then there is a service cost statement you need to prepare again based on my standing charges, which is the fixed cost, and then my running cost. Is it clear? Variable cost. Yes, that's all. You have to prepare the service cost statement. Right? Now you have different departments of services. When you have your, say, transportation industry problems, then you have your, say, hospital, then education related. Yes or no? Right? Then hospitality, that is your hotels. Based on that, you have different problems, and toll plaza problem. These are the different category of problems that you have. Is it clear, all of you? Yes. All right. Open your CAPS material theory. Yes. Service costing or operating costing. That is the cost of operating a service. Cost unit. Yes, ma. One of you read.
Cost unit operating costing has two different cost units: simple or single unit, only one unit of measurement; composite unit, two units of measurement. Composite unit, absolute unit, example distance traveled into tons; commercial unit, example of average load into total distance traveled.
Under commercial unit, you put hyphen and write simple average. For absolute unit, you need to write weighted average. Right? Normally, absolute unit method is followed. Normally, absolute unit method or absolute basis unit basis is followed. Normally, absolute unit basis is followed. Commercial unit basis to be followed. Commercial unit basis to be followed. Aditya, are you writing? Commercial unit basis to be followed. Commercial unit basis to be followed only if specifically asked. Only if specifically asked. Clear, all of you? Yes, ma'am. Continue.
Computation of cost of operating of services. Particulars total per unit. Standing cost, rent of garage, driver's salary. Semi-fixed cost, running variable cost, repairs and maintenance, fuel or petrol, cost of operating a service, add profit, sales, takings and fare. Multiple costing. The method of costing followed by a business wherein a large variety of articles are produced. Cost of each article is computed separately by using two or more methods of costing. Example, building involves contract costing for construction services, service costing for interior.
Clear, all of you? Yes. Star Airlines operates a single aircraft of 180 seats, okay, capacity between city ND and GA. The average normal occupancy is estimated at 70% per flight. The average one-way fare is rupees 12,500. The cost of operation of the flight are, as corrected by an expert analyst, are as follows. Fuel cost per flight from ND to GA. Food served on flight from ND to GA. Right? No charge to the passenger. That means this is only my cost. I cannot charge it to the passengers. Commission paid to travel agents, 7.5% of fare. Fixed costs, leasing and landing charges per flight. Salaries of flight crew per flight ND to GA. Assume that the fuel costs are unaffected by the actual number of passengers on a flight. Clear, all of you? So therefore it is fixed for per journey. Calculate the net operating income that Star Airlines makes per flight from ND to GA. Star Airlines expects that its occupancy will increase to 144 passengers per flight if the fare is reduced to 11,670. Advise whether this proposal should be implemented or not. Very simple. You calculate first one service cost statement and then you calculate again, right? Only if the profit is increasing should you go for it. Yes. Number of passengers 180 seats into 70%, it is 126. Clear all of you? 126. Fare, they have given 12,500 multiply. Variable cost, fuel, food, based on for each passenger they told 270 multiply. Commission is 7.5% of my sales, correct? 7.5% of sales. Contribution per flight, you find out. Fixed cost, you subtract, you get the net income per flight. Okay. Now, calculate this for 144 passengers. 144 passengers. Here, food cost obviously will vary. Commission will vary. However, fixed cost is not going to vary. Is it clear all of you? Fixed cost is not going to vary. It is going to remain the same. Right? So you get 2,85,564, whereas earlier it was 1,92,855. Therefore, there's an increase in contribution. Hence, the proposal is acceptable. Simple or not? Yes. Now, CNG car and ENG car problem. Have I done this in the class? Have I done this? Yes or no? First pass students.
Yes, sir.
Yes. Class Madidina? I don't know. Was it there in the caps material? Yeah. What was it there? All of you? I don't think so. Okay, okay. Anyway, I'll do it. Look at this. 1 second. Yes. Look at this, all of you. So, life of the car, they've given 15 years and 10 years. Clear? 15 years and 10 years. Residual value is given. Okay, all this is doesn't matter. What is replacement cost is important. Tire replacement cost in every 5 year. All of you concentrate now. Tire replacement every 5 years. 15 years is the lifespan. Understood? 15 years is the lifetime. Now, in 15 years, first 5 years, after 5 years, you'll replace once. Next, at the end of 10th year, you'll replace once. Yes or no? 15th year, will you replace? No, because the life is over. Did you understand? Life is over. Therefore, if there are 15 years, you'll have 2 times replacement cost. If there is 10 years, then what is the number of replacements? Only one after 5 years. That is what is important. Next, battery replacement cost is once in every 8 years. Okay. Therefore, if there is 15 years, then you'll have one replacement after 8th year. If there is 10 years, also you'll have one replacement after 8 year. That's all you have to remember. Clear all of you? This is an important adjustment. Other things I think you will manage. Then based on occupancy you have to do. Equivalent units you have to be careful. Equivalent units. All of you concentrate. Yes. Equivalent units. If total cost is given, if the total cost is given, breakup of the cost is not given. Understood all of you? Breakup of the cost is not given. And they've told you that the cost for, say, single room is X. Cost for single room is X. And for double room, it is, say, 2 times that of X. Did you understand? In that case, you have to use equivalent units concept. Clear all of you? What is equivalent units? When one is expressed in terms of the other. When one is expressed in terms of the other. Is it clear all of you? Right? So in that case, you will take X for, say, A, and you will take 2X for B, and totally you will add 3X. Is it clear all of you? So based on this, you will find out what the equivalent basis is. So when do we use equivalent units? For sales, you will use it if they have not given the basis. If they have not given the split, is it clear? Right? Cost, say if the question itself was specifically given, already given, what is the cost for each single room, double room, what is the fixed cost, variable cost, then you don't have to use the equivalent units. Clear all of you? You'll use the equivalent units for cost only if the question is silent. Only if the question is silent. Is it clear, all of you? If the breakup is already given, equivalent units are not used. If breakup is not given, then we use the equivalent units. Artha aita? Yes. Did you understand this? Next, what is important is always round trip. If there's a round trip, you have to multiply into 2. If there's a round trip, you have to multiply into 2. If there are 2 shifts, again you have to multiply into 2. Nenpagta idea? Next, say if there is, you're calculating 10 kilometers. You're calculating 10 kilometers. Now a truck compulsory goes and then returns. Compulsory goes and returns. It is going loaded but coming back unloaded. It is going loaded but coming back unloaded. In that case, for kilometers, there is no change. For kilometer, you will calculate normally. Is it understood? However, while calculating 10 kilometer, you have to multiply into half. You have to multiply into half. Nenpidiya? Because it's returning empty. Because it's returning empty. Is it clear, all of you? That is one. Yes, always calculate kilometers first and then calculate passenger kilometer or ton kilometer. Always calculate kilometers first and then multiply passengers or multiply tons to calculate passenger kilometer, ton kilometer. Sir, why do we need the kilometers separately? To calculate my variable cost. To calculate variable cost, they have given you, say, fuel consumption cost, etc. Is it clear? Yes. Yes. All right. In service costing, please go through the different adjustments and everything that I have marked in the class. Okay. That is, say, the lighting adjustment problem. Yes. Room night problem. And then equivalent unit problem. All of this, you please go through the CAPS material, what is done in the class. Clear, everybody?
Yes, sir.
Yes, sir.
Yes. Look at this now. Case scenario 1. Ecotrans Logistics Private Limited is a regional goods transport company based in the industrial hub of Lodging Port, providing daily freight services to and from Green City, a fast growing metropolitan area located 120 kilometers away. Okay, it is 120 kilometers away and it goes to and from, that means round trip. The company has been operating for over a decade and has built a reputation for timely deliveries, especially for fast moving, all the blah 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 stories. To meet increasing demand, Ecotrans has recently expanded its fleet and now has 24 transport vehicles. The company promises reliable daily service and each vehicle typically completes one round trip per day, carrying cargo in both directions. That means it's not returning empty. Ecotrans emphasizes sustainability and efficiency with systems in place, blah, blah, blah. However, to remain competitive and ensure profitability in a cost-sensitive industry, management has decided to undertake detailed cost analysis for the month of April. This analysis will guide pricing strategy and assess whether the current operations are yielding the desired profit margin of 20%. So you need to calculate and see whether it's 20% or not. On freight revenue, on sales, 20% on sales. The following data has been compiled by the finance operations department. So therefore, relevant information is only what I've highlighted. To and fro, 120 kilometers, 24 transport vehicles, one round trip per day, carrying cargo in both directions, desired profit margin of 20% revenue. Right? Now, fleet composition, there are 6 vehicles, 8, 6 and 4. Total should be equal to 20, 25 or 20, 24 I think they've given. 24. Yes, total is 24. Capacity per vehicle they've given 10, 14, 18 and 22. Clear, all of you? Therefore, for 10 kilometers, all of this you have to individually do and then add it up. All of this you have to individually do and then add it up. Each vehicle operates one round trip per day on average. Per day it is, right? That we have already understood there. Vehicles are loaded to 85% capacity. on forward journey and 65% on return journey. So very simple, huh? So 10 metric ton, right, into 85% plus 10 metric ton into 60%, right, into, I think you have 120 kilometers each of them. So first find out the kilometers and then multiply into the metric tons. Understood? Right? So 120 kilometers is going and then coming back. So 120 into 2 aಗುತ್ತೆ. That will be my kilometers. Did you all understand? So 120 going and coming, that is for one vehicle. There are 24 vehicles. So into 24. Is it clear, all of you? That is for one day. So you have to multiply into the number of days. They have given 26 days. So multiply 26 days. ಅರ್ಥ ಆಗ್ತಾ ಇದೆಯಾ? Yes. Simple or not? Simple or not? Yes.
Yes.
Then multiply into the ton kilometers. Simple. On average, 12% of the fleet is under maintenance at any time. 12% of the fleet is under maintenance at any time. Okay. So that means for calculating this ton kilometer, obviously this 12% maintenance I have to reduce. 12% maintenance I have to reduce. Is it clear, all of you? Now. So then other costs are given. Okay. The company operates an in-house workshop that handles routine emergency repairs for both its own fleet and external vehicles. As part of the internal cost allocation, 45% of the transporter's manager's salary is charged to the workshop to reflect time and resources dedicated to overseeing maintenance operations. In return, the transport department has been apportioned 95,000 by the workshop for repairs and services support during the month. Okay, fairly simple question, nothing complicated here. Straightforward adjustments. Agreed or not? Straightforward adjustments. Yes. So fixed charges. So first we have to see working note for calculation of, yes, number of vehicles available per day into number of days into trips into wages per trip they're given. Did you understand? And in that 88%, why 12% maintenance? Is it clear, all of you? 12% it is under maintenance. So here also 21 into 2, right? So again, the maintenance is not considered here for toll charges. Is it clear, all of you? Here also 88%. So if you see consistently 88%, they're doing because of maintenance. Yes, that's what I told you, maintenance has to be deducted. Correct or not? This is exactly what I told all of you. This is exactly what I told. 6 into 10 plus 8 into 14 plus 6 into 8. Right? All of this into the total number of kilometers. Here 5491.2 kilometer. Is it clear, all of you? Right? So first find out the kilometer, then multiply into the weights I told. Right? Yes, that's all. ಅದನ್ನೇ ಮಾಡಿದ್ರೆ ಎಲ್ಲ ಆನ್ಸರ್ ಬಂದ್ಬಿಡುತ್ತೆ. So please go through this, solve this problem on your own. Okay. That's it. So with that, I think we can conclude even service costing. Please go through all the other problems. Last chapter, what I have so far completed, marginal costing. Sixth state of, right? What is marginal costing or marginal cost first, right? The cost saved or cost incurred by producing or not producing an additional unit. Yes, the cost saved or cost incurred or cost saved by producing or not producing an additional unit is nothing but my marginal cost. It's also called as variable cost. Therefore, marginal costing is also called variable costing. Clear, all of you? Right? Variable cost remains fixed per unit and varies in total. Remains fixed per unit and varies in total, whereas fixed cost remains fixed in total, but varies per unit. With the increase in the number of units, all of you concentrate now. With the increase in the number of units, the cost per unit will decrease or increase. The cost per unit will decrease or increase.
Decrease.
It will start decreasing. Variable cost is same, but fixed cost per unit starts reducing. Therefore, since the fixed cost does not change, when more and more units are produced, the total cost per unit, the cost per unit keeps coming down. Because cost per unit comes down, what happens to margin? Margin starts increasing. Therefore, profit percentage increases. Is it clear, all of you? This is mainly because of margin cost. This is the essence of margin cost. Clear, all of you? Yes. Right? What is the fundamental formula we learned for marginal cost? Right?
Sales minus
Selling price
variable
minus variable cost is equals to contribution, which is equals to fixed cost plus profit.
profit
Is equals to fixed cost plus profit, whereas sales and variable cost is within
within hands of the management.
Within the
is
control
within
of
the
the man.
control of the management, whereas profit and fixed cost, profit is a balancing figure, fixed cost is sunk in nature, profit is balancing figure. Did you all understand?
Yes.
Yes,
So there
sir.
are two ways in which profit can be increased. One is to increase the sales. Sales can be increased by increasing the number of units. Selling price normally determined by market. Number of units I can increase by increasing my market share. Number of units I can increase by increasing my market share. At the same time, I can reduce my variable cost. I can decrease my variable cost. Is it clear, all of you? By these two ways, I can ensure profit is increased. Yes, from this fundamental equation itself, we can understand what is contribution. Contribution is the amount earned over and above my variable cost. Contribution is the amount earned over and above variable cost to cover my fixed cost in profit. Contribution is the amount earned over and above my variable cost to cover my fixed cost in profit. Is it clear, all of you? Yes, this I call it as contribution. Yes. Now, what are the other formulas we learned? First one is called profit volume ratio. Yes, profit volume ratio. That is, what is the formula? Contribution by sales into 100. Clear, all of you? Yes. When two-period data is given, we found out what is it? It is nothing but change in
cost
Profit divided by change in sales into
cost by
100.
change in units. Change in cost divided by change in units also will give you the contribution. How, sir? How is that change in my change in profit divided by change in units? Change in contribution and next is change in units. Change in contribution, change in units. Clear, all of you? Change in contribution divided by change in units obviously will give you profit volume ratio. I think there is no doubt there. But how change in profit? Because change in contribution and fixed costs will get cancelled out. That's nothing but change in profit. Is it clear? 1 minus variable cost percentage is also PVR. Clear, all of you? So normally you can calculate PVR on per unit basis because selling price per unit divided by minus the variable cost per unit is also contribution. So contribution per unit divided by selling price per unit will give you PVR. You don't have to know the total sales and total contribution because in the numerator and denominator, it is just number of units sold, which is the same, which will get knocked off. Therefore, on per unit level as well as on total level, it is the same. Therefore, on per unit level as well as on total level, it is the same. Is it clear, all of you? These are all my profit volume ratio related formulas. Were you able to recall? Yes. Next, we learned break-even sales. It is that level of sales. I told you always start with this. It is that level of sales at which there is no profit, no loss. At which total cost is equal to is the sales. At which at which contribution equal to fixed cost. At break-even sales, contribution is equal to fixed cost. Contribution is equal to fixed cost because there is no profit. Contribution is equal to fixed cost plus profit. Profit is zero. Therefore, at break-even sales, contribution equal to fixed cost. Is it clear, all of you? How do you calculate this? Since I told you at break-even sales, contribution equal to fixed cost. What is the formula we learned for contribution? Sorry, PVR. PVR is equal to contribution by sales into 100. Contribution by sales into 100. Therefore, can I say sales is equal to contribution by PVR? Therefore, can I say sales is equal to contribution by PVR? Therefore, can I say break-even sales is also equal to contribution at break-even divided by PVR? Therefore, can I say break-even sales is equals to contribution at break-even divided by PVR? What is the contribution at break-even? What is the contribution at
cost.
break-even? Fixed cost. Therefore, break-even sales is equal to total fixed cost divided by PVR. Total fixed cost by PVR. Is it clear? Right, this is in value. If I want to find out in units, if I found out in units, it's nothing but total fixed cost by contribution per unit. Break even sales in units is nothing but total fixed cost divided by contribution per unit. Yes, this is the break even sales formula. Next, margin of safety. Sales achieved over and above my break even sales. Sales achieved over and above break even sales is nothing but margin of safety. Yes, nothing but margin of safety. Therefore, margin of safety is equal to my actual sales minus break-even sales. Is nothing but actual sales minus break-even sales. Clear? Next, what's another formula for calculating margin of safety? Margin of safety is also equals to profit by PVR. Profit by PVR. Is it clear? Profit by PVR. I told you, any sales achieved over and above my fixed cost, sorry, over and above my break-even sales, any sales achieved over and above my break-even sales, the contribution is what? Contribution is what? Any sales achieved over and above my break-even sales, that is my margin of safety. Therefore, contribution of my margin of safety is what?
Profit.
Is profit. Because contribution of break-even sales is what?
Fixed cost.
Fixed cost. My total sales is break-even sales plus margin of safety. My total sales is break-even sales plus margin of safety. Yes or no? The contribution at break-even sales is fixed cost. Contribution at margin of safety is profit. Therefore, my total contribution is fixed cost plus profit. Total contribution is fixed cost plus profit. For break-even sales, formula is fixed cost by PVR. For margin of safety, the formula is profit by PVR. Is it clear? Or yes. Also, therefore, 1 minus margin of safety percentage is what? 1 minus MOS percentage is what?
Break-even sales.
BS percentage. Margin of safety percentage is equal to margin of sales by total sales or my actual sales. Is it clear? Yes. The last formula is sales at X profit. Sales at X profit. What is the formula for sales at X profit? Total fixed cost plus X profit divided by PVR. Total fixed cost plus X profit divided by PVR. Is it clear, all of you? Yes. And sales at X profit in units is total fixed cost plus X profit divided by contribution per unit. Divided by contribution per unit. So these are my major formulas. There are so many other alternate formulas. I told you all permutation combination we should know. Is it clear, all of you? Yes. So this is the sum and substance of marginal costing. Yes. So when you apply marginal costing, it helps in decision making. It helps in decision making. Sir, how? One of the decision making is for identifying which is the product that I need to manufacture, which is the or which I should sell, right? Which is the product I should not, or how many units of product I should sell. This is called as product mix. Determination of product mix in case of a limiting factor. Determination of a product mix in case of a limiting factor is one of the decision making. Is one of the decision making which is guided by marginal costing. Clear, all of you? Yes. What is the limiting factor, Aditya? Yes. What is the limiting factor? Any factor, right? Or any resource that limits my production, is nothing but limiting factor. Sales is the implied limiting factor because market demand, if it's not there, then I cannot sell. Then I cannot produce. Why? What will I produce if there's no demand? Demand is the implied limiting factor. Sales is implied limiting factor. Clear, all of you? Yes. Sales is the implied limiting factor. What are the other limiting factors? It could be labor hours. It could be machine hours. It could be my raw material kgs, etc. Yes. So we need to find out what is the contribution per limiting factor, rank the products based on contribution per limiting factor, then prepare the table for identifying what is the optimum product mix. Is it clear, all of you? Yes. So there were limiting factor problems we did. Next, we understood that. All of you concentrate now. If there's a special order, that I've received, as long as my fixed costs are covered, the special order selling price should be at least equal to variable cost. The special order selling price should be at least equal to variable cost so that I don't make a loss. As long as it is more than my variable cost, or in other words, I will not say at least equal to, I would say it should be at least more than my variable cost. Clear all of you? As long as it is more than variable cost, I will make profits. I will make profits. Is this clear? Because my fixed cost is already covered by my normal sales. By my normal sales. Yes. So these are your special order related problems that you get. Yes. Then you've got cost indifference point. Cost indifference point. Yes. There are two alternatives. There are two alternatives. One alternative, fixed cost is more, variable cost per unit is less. Another alternative, variable cost per unit is more, but fixed cost is less. But fixed cost is less. When the units produced is less than cost indifference point. When the units produced is less than cost indifference point, that means you do not have enough profits to meet my fixed cost. To meet my fixed cost, you will choose an alternative with what? With lower fixed cost. You'll choose an alternative with lower fixed cost. Is it clear? When your units produced is more than cost indifference point, you'll choose an alternative with lower variable. Don't tell me higher fixed cost. No, lower variable cost. Is it clear? Always target on the cost being lower. Always target on the cost being lower. Is it clear, all of you? I repeat, if the units produced is more than cost indifference point, you will choose an alternative with lower variable cost. If it is less than cost indifference point, you'll choose an alternative with lower fixed cost. Did you all understand? Then you had one shutdown related problem. Shutdown related problem. Remember, all of you? Shutdown. What is the point at which shutdown has to be achieved? Yes or no? There should be avoidable fixed costs. If there is no avoidable fixed cost, then there is no point. As long as your selling price is more than variable cost, you have a positive contribution, you should sell. You should not shut down. But if there are avoidable fixed costs, then shutdown point is nothing but avoidable fixed cost divided by PVR or contribution per unit. Yes, avoidable fixed cost divided by contribution per unit will give you what is the shutdown point. Is it clear, all of you? Yes? All right. I think these are more or less the different types of concepts. And the last one is margin costing versus absorption costing. Margin costing versus absorption costing related problems. Yes, absorption costing valuation is based on what? Absorption costing valuation is based on what? Based on which cost? Total cost or variable cost? Total cost or variable cost?
Total cost.
Total cost.
Absorption costing. Absorption is based on total cost. Valuation of inventory is based on total cost. Whereas under marginal costing, inventories are valued at variable cost. Inventories and everything is based on variable cost. Is it clear, all of you? Yes. So that's the key difference between marginal costing and absorption costing. Is this clear? Then obviously you have behavior-based classification of cost, function-based classification of cost. I'm not talking about the theoretical differences, but from a problem perspective, this is the problem. So how do I solve margin costing versus absorption costing problem? First, do the normal margin costing statement. Is it clear? Sales minus variable cost contribution minus fixed cost profit. Is it clear, all of you? There's margin costing. Then comes to absorption costing. You have sales minus your all the production costs. That is based on function-based classification. You have to minus everything, not based on fixed and variable. It is not based on fixed and variable. It will be based on function classification. Minus production cost. Did you understand? Yes. Here you have to find out the total cost. Say the variable cost rupees is 6. Fixed cost per unit they have given 2. Add both and then multiply. 8 rupees you will charge. Is it clear, all of you? Then find out what the profit is. From the profit, right, to the profit, you will add over absorption or you will subtract over absorption. To the profit, you will add over absorption or subtract. Just now in absorption costing, overhead chapter we discussed. Over absorption means profit is overstated or understated.
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 Add back the
Profit is understated, therefore you have to add it back. Clear, all of you? Under absorption, you will subtract. Is it clear?
Yes.
Right? So fixed cost, whatever is there, into number of units produced. So normally absorption is based on units produced. Normally absorption is based on units produced. Is it clear, all of you? Yes. So based on the number of units produced, then you will get profit as per absorption costing. However, you will notice that the profit as per absorption costing and profit as per marginal costing will not match. This is because of valuation difference of inventory. Valuation difference of inventory. So that again, you have to find out what the fixed cost per unit into opening stock and closing stock. You have to give the effect and find out what the reconciliation is. Is it clear, all of you? So we normally start from your marginal costing. Yes. To that, you will add closing stock because closing stock is like profit. Closing stock is like profit. Then you will subtract opening cost, opening stock to arrive at profit as per absorption cost. Right? Start with margin, end at absorption. End with absorption. Is it clear, all of you? Yes. So these are the different type of problems what we had discussed in margin costing. Yes. All right. Let us go through the theory. Open the caps meeting. Revision method. Yes. Marginal cost is read Chitra like
Marginal costing. Marginal cost means cost incurred or saved by producing or not producing a unit. Marginal cost equals variable cost equals prime cost plus variable overhead. Fixed cost should always be expressed in total. BEP equals that level of sales at which sales equals cost. Absorption costing versus marginal costing. Absorption costing is a method of costing wherein all the costs, both fixed and variable, are absorbed by the product based on certain absorption rates. Marginal costing is a method of costing wherein all variable costs or marginal costs are considered while determining the cost of a product. Key factor or limiting factor. A factor of production which limits the number of units to be produced and sold. Normally, sales is the limiting factor except in monopoly industry. Decision making in key or limiting factors. Sales equals sales. Choose the products having highest contribution per unit. Any other, choose the products having highest contribution per limiting factor. Cost volume profit analysis. The impact of cost and volume on the ultimate profitability of company, that is maximizing the sales, reducing the cost. Historical cost is irrelevant. The cost has already been incurred and do not affect the decision. Example, book value of machinery, etc. Sunk cost is irrelevant. The costs which are already paid either for goods or services availed or to be availed. Example, raw material purchased and held in store without having replacement cost, cost of drawing, blueprint, etc. Committed cost is irrelevant. The committed costs are the pre-agreed costs which cannot be revoked under the normal circumstances. This is also sunk cost. Example, cost of materials as per rate agreement, salary cost to employees, etc. Opportunity cost is relevant. The opportunity cost is represented by the foregone potential benefit from the best rejected course of action.
For this
Add the option under
opportunity
the
cost,
consideration.
always use the same method terminology that we have learned. Cost of benefit foregone by not selecting the next best alternative. Yes, continue.
Had the option under consideration not chosen, the benefit would come to the organization. Notional or imputed cost relevant. Notional costs are relevant for the decision making only if companies actually foregoing benefits by employees its resources to an alternative course of action. For example, notional interest on internally generated fund is treated as relevant notional cost only if company could earn interest from it. Shutdown cost is relevant when an organization suspends its manufacturing operations. Certain fixed expenses can be avoided, and certain extra fixed expenses may be incurred depending upon the nature of the industry. By closing down the manufacturing, the organization will save variable cost of production as well as some discretionary fixed cost. This particular discretionary cost is known as shutdown cost. Marginal costing versus absorption costing. Marginal costing, only variable costs are considered for product costing and inventory valuation. Absorption costing, both fixed and variable costs considered for product meeting and inventory valuation. Fixed costs are regarded as period cost. The profitability of different products is judged by the PV ratio. The fixed costs are charged to the cost of production. Each product bears a reasonable share of fixed costs, and thus the profitability of a product is influenced by the apportionment of fixed costs. Cost data presented highlight total contribution of each product. The cost data are presented in conventional pattern. Net profit of each product is determined after subtracting fixed cost along with the variable cost. The difference in magnitude of opening stock and closing stock does not affect the unit cost of production. The difference in the magnitude of opening stock and closing stock affects the unit cost of production due to the in part of related fixed cost. In case of marginal costing, the cost per unit remains the same irrespective of the production as is valued at variable cost. In case of absorption costing, the cost per unit reduces as per the production increases as it is fixed cost which reduces whereas the variable cost remains the same per unit. Basic formula, sales minus variable cost equals to fixed cost plus or minus profit or loss. By multiplying and dividing LHS by S, that is sales into sales minus variable cost divided by sales equals fixed plus profit, fixed cost plus profit. Sales into PVR ratio equals to fixed cost plus profit or contribution. PV ratio equals S minus variable cost by S. BES into PVR ratio, that is equals to fixed cost. At VP, profit is 0. BES equals to fixed cost by PVR ratio. PVR equals to fixed cost by BES. Sales into PVR equals to contribution. PVR equals contribution by sales. BES plus margin of safety into PVR ratio equals contribution. That is total sales equals BES plus margin of safety. BES into PVR ratio plus margin of safety into PVR ratio equals to fixed cost plus profit. By deducting BES into PVR from LHS and fixed cost from RHS in 10 above, we get margin of safety into PVR ratio that equals profit. PV ratio equals change in profit by change in sales. PV ratio equals change in contribution by change in sales. Profitability equals contribution by key factor. Margin of safety equals total sales minus BES or profit by PVR. BES equals total sales minus margin of safety. Margin of safety ratio equals total sales minus BES divided by total sales. Effect of some independent situations on PVR. And decrease in physical sales volume will not change the ratio of sales value.
When physical sales volume, so now when number of unit decreases, will it impact my PV ratio? No, because PV ratio I told you is nothing but selling price per unit minus variable cost per unit. Clear all of you? Because it's based on per unit concept, obviously it's not going to impact my PV ratio. And increase in the fixed cost, again, fixed cost, will it impact PV ratio? No, because sales minus variable cost is contribution. Contribution by sales is PV. How is it going to impact my fixed cost? A 10% decrease in both selling price and variable cost. If both is decreasing, then it will not impact PV ratio. It will get offset. A 10% increase in the selling price and a 10% decrease in the physical sales. See, physical sales volume, it's not going to impact. Did you understand? This is not going to impact, but a 10% increase will impact. Did you understand all of you? A 50% increase in the variable cost per unit and a 50% decrease in the fixed cost. Again, the 50% decrease in the variable cost, will it impact? It will not impact. Yes. However, 50% increase in variable cost. If variable cost is increasing, contribution will decrease. If contribution decreases, PV ratio will decrease. And increase in the angle of incidence, I told you it will impact the PV ratio. Right? Refer the class notes and discussion. All right. Okay. Come to the problem section. Yes, look at this problem. The analysis of cost sheet of A Limited for the last financial year has revealed the following information for its product R. Clear all of you? Yes, direct material, labor. So when you see this, immediately it should strike something. COGS ನೋಡಿ ತಕ್ಷಣ ಏನು ಸ್ಟ್ರೈಕ್ ಆಗುತ್ತೆ? 30% of, and cost of sales. What does it strike? Immediately, what does it strike?
Cost sheet.
Cost sheet. Yes, you do it based on a cost sheet formula approach. Clear, all of you? Yes, look at this formula based on the cost sheet. A dairy product manufacturing company manufacturing baby food with a shelf life of 1 year. Okay. Furnishes the following information. On 1st April 2023, the company has an opening stock of 20,000 packets whose variable cost is 180 per packet. In 2023, production was 1,20,000 packets and expected production in 23-24 is 1,50,000 packets. Expected sales for 23-24 is 1,60,000 packets. In 2023, fixed cost per unit is 60 and it is expected to increase by 10% in 2023. As soon as you see fixed cost per unit, what are you supposed to do?
Multiply by budgeted unit.
Yes, multiply by the budget units now. But they have told in 22-23 it is fixed cost per unit for 60. Therefore, you should multiply with the units of 22-23. Is it clear, all of you? Yes. The variable cost is expected to increase by 25%. Selling price in 23-24 has been fixed at rupees 300 per packet. You are required to calculate the break-even volume in units for 22-23. Yes. Next, so selling price is given. Variable cost is also given. Yes. Variable cost is 180 per packet. Selling price is rupees 300 per packet. So selling price minus variable cost is contribution per unit. You can find out contribution per unit and as well as PVR. Clear? Next, they have given the fixed cost per unit, multiply into the number of units, so 60 and then 1,20,000, you find out total fixed cost. Once you know total fixed cost, you can find out the break-even sales. Yes or no? The MTech manufacturing company is presently evaluating two possible processes for the manufacture of a toy. The following information is available. Variable cost, selling price, total fixed cost, capacity, anticipated sales next year in units. Okay. Identify the process which gives more profit. Would you change your answer as given above if you are informed that the capacities of the two processes are as follows? Yes. So, yes. Acha, two process which is A is 6 lakh units and B is 5 lakh units. I'm just saying if they've given any, the expected sales for the 23-24 they've given is 1,60,000 packets. Okay. So each question independently. So I think this has to be read independently and done. That's all. Okay. Capacity units and anticipated sales next year. Doesn't matter. Okay. Yes. So I told you fixed cost 60 into 1,20,000. 60 into 1,20,000, then it is increased by 10%. Variable cost 180. Very simple. Calculate the break-even point for the next year. So here, variable cost is increased by 25%. They've given the question. Fixed cost is increased by 10%. So find out fixed cost and then variable cost. Then minus 300, you'll get the contribution per unit. Now, this is important. The total contribution required to recover the total fixed cost. All of you concentrate on this is important. ಅದಕ್ಕೆ ನಾನು ಈ ಪ್ರಾಬ್ಲಮ್ ಇಲ್ಲಿ ಹಾಕಿರೋದು. Total fixed cost required to recover total fixed cost, total contribution required to recover total fixed cost in 23-24 and to reach break-even volume is 79,20,000. Yes, everybody? Now, out of this, there is opening stock of 20,000 units. For this opening stock, what is the contribution? Contribution will be based on 180. Artha. For the opening stock, contribution will be based on 180 alva. Did you understand? Yes. So therefore, 300 minus 180, mark this important. Mark this important. So balance contribution to be recovered from 23-24 sales. From 23-24 sales. Adike you will take 225 variable cost. Is it clear? That's the only thing. Everything else is simple. Everything else is straightforward. Understood? Another problem. Look at this. I'm only doing different type of problems. Artha aita? What is done in the class is already done. Clear? What I've done in the class is already done now. You can go through that. These are little different types. Look at this. An agriculture based company having 210 hectares of land is engaged in growing three different cereals, namely wheat, rice, maize annually. Clear, all of you? So 210 hectares it is growing wheat, rice and maize. The yield of the different crops and their selling price are given below. Yield is given in kgs per hectare. Okay, per hectare what are the kgs? So 2000 kgs it gives for 1 hectare, 500 kgs and 100 kgs. So there are 210 hectares. Clear, all of you? 210 hectares. Now the variable cost data of different crops is as follows: labor charges, packing, and then this. Clear, all of you? Next, the company has a policy to produce and sell the three kinds of products. The maximum and minimum area to be cultivated for each crop is as follows: maximum area, minimum area. This is a product mix problem. Product mix problem. Is it clear? Yes. So first find out what is the contribution per hectare. What is the contribution per hectare? What is the selling price per kg? 20. 20 into 2000 is the contribution per hectare for wheat, rice and maize. Is it clear, all of you? Yes. Next. They've given you all figures in per kg. Again, for wheat it is 8, 2 and 4. That is 14 rupees. Artha agta idya? 14 rupees per kg. Therefore 14 minus 20 is 6. 6 into 2000 will give you the contribution. Yes, per hectare. Contribution per hectare. Yes. Next. After that, they have given you. So identify which crop gives you the highest contribution per hectare. Did you all understand? Which crop gives you the highest contribution per hectare? After that, maximum and minimum area is given. So minimum you have to cultivate. Minimum. Therefore, what is balance? 100, 40 and 10 minimum you have to do. So 100 plus 40 plus 10, 150 hectares. Balance is 60 hectares. Artha agta idya? Balance is 60 hectares. That 60 hectare you have to find out you will give it to which crop. So that 60 obviously you can give it to wheat, because wheat has still another 60 excess here. If wheat is highest, I need to check which is the highest. Let us see. Which is the highest? Here, which crop is giving you highest contribution per hectare? Highest contribution is rice. Highest contribution is rice. Then I will tell you by common sense, 140, 150 is gone. 60 is left. 60 only, 10 excess is there. This I will give to rice. 10 excess to rice. Clear, all of you? Balance 40 will be wheat. Let us see the solution. Yes. So can you see this? 10 is to rice. The balance, sorry, 40 or 50 worth of 60 there. So balance 50 is for wheat. Is it clear? Right? So again, this is a little different type of key factor problem. That is why I thought I will keep it here. Right? So please go through the remaining, all of these different type of margin costing problems. Sir, which is most important? Your recent examination questions, what is that? That is the most important. You can't miss that. Did you understand? And then the concept base. After that, you can go to the additional questions. Artha, your recent examination. See, I've kept concept based here. I've kept concept based here. Why? So that, one second. Yes, I've kept the concept based questions first. So that you understand the different concept. Aste. But Anganta, concept based Markundu, do not miss on the recent examination questions. Did you understand, all of you? Yes. So let me show you. Case scenario based questions, all of them you should do. In all the chapters I'm saying, Artha agta idya? In all the chapters, do not miss the case scenario based questions and the recent examination questions. This is Roman number 3. These are all case scenarios. Yes. Recent examination questions miss ಮಾಡಬೇಡಿ. Just because Roman number 3 ಇದೆ ಅಂತ ಇದನ್ನ miss ಮಾಡಬೇಡಿ. Okay? Yes, these are important. So this one anyway will go through the recent, RTP. Then look at this MTP2 September 25, September 25, September 25. ಇದನ್ನೆಲ್ಲ go through ಮಾಡಿ. Clear all of you? So recent examination you cannot miss. Okay? Yes. Now let us look at your Jan 26 RTP, and with that we can conclude today's session. So look at this. Jupiter Limited, a fast moving, the same thing, company intends to diversify the product line to achieve full utilization of its plant capacity. As a result of considerable research made, the company has been able to develop a new product called X. X is packed in cans of 100 ml capacity and is sold to the wholesalers in cartons of 24 cans at rupees 120 per carton. Normally, this 100 ml may not be required anywhere. Let's see. Since the company uses its spare capacity for the manufacture of X, no additional fixed expenses will be incurred. However, accountant has allocated a share of 1,25,000 per month as fixed expenses to be absorbed by X as a fair share of the company's present fixed cost to the new product for costing purposes. Marginal costing only doesn't impact. Did you all understand? Sit straight, all of you. Yes. Marginal costing doesn't matter now. All this allocation and all, why is it required in marginal costing? The company estimates the production and sale of X at 1,50,000 cans per month on the basis of the following cost estimates per carton. I told you per carton is only what is important. Yes. So 1,50,000 cans is there, and then carton, that's enough. That ml capacity I told you may not be required anywhere. Okay. Direct material, wages, all overheads and total cost. At a detailed market survey, the economy is confident that the production and sales for X can be increased to 1,75,000 cans per month and ultimately to 2,25,000 cans per month. Okay. Currently, it is at 1,50,000. Clear, all of you? The company currently 1,50,000. They feel like they can increase it to 1,75,000 and to 2,25,000. The company at present has a capacity for the manufacture. Sorry. Capacity is 1,50,000. They can increase the sales to 1,75,000 and 2,25,000. Clear, all of you? Now, Aditya, what is the empty cans? Look at this. The company at present has a capacity for the manufacture of 1,50,000 empty cans. Okay. And the cost of the empty cans if purchased from outside will result in a saving of 20% in direct material, 10% in direct wages, and 10% in variable overhead costs of X. The price at which the outside firm is willing to supply the empty cans at 0.675 per empty can. If the company desires to manufacture empty cans in excess of 1,50,000 cans, a machine involving an additional fixed overhead of 7,500 per month will be installed. That means this is resulting in increase of fixed overheads. State by showing your workings whether the company should make or buy the empty cans at each of the 3 volumes of product X, namely 1,50,000, 1,75,000 and 2,25,000. Yes. Now, all of you look at this now. I'll calculate money. What are the savings we are having? If purchased from outside, it will result in a saving of 20% of direct material. Calculate what is 20% of 54. 20% of 54 plus 10% of direct wages. 10% of direct wages. Okay, and we have to calculate what is the variable overhead. Or look at this now. This is where this allocated exam, will come into picture. Please multiply 27 into 1,50,000. 27 into 1,50,000.
40 lakh
40,50,000.
50,000.
40 lakh 50,000.
40 lakh 50, is it?
Yes.
Okay. Yes. So this 10% of 54, 20% of my direct material and 10% in wages and 10% of variable overheads will be the savings. Clear, all of you. However, the price at which, but this is very important. Look at this. This is given per carton. Clear, all of you. This is given per carton. Be very careful. This is given per carton. In each carton, there are 24 cans. In each carton, there are 24 cans. Therefore, this has to be divided by 24. This has to be divided by 24. Is it clear? That's where even I made a mistake. So 27 divided by 24, how much? 27 divided by 24.
1.125.
1.125 into 1,50,000.
1,68,750. 750.
1 lakh.
68,750.
That is my total overheads. Total overheads. In that they are saying fixed overheads would be around 1,12,500. I think there is no other information with respect to fixed overheads. So that has to be minus. The balance should be my
56,000 to
Yes.
56,250.
Okay. Let us see the answer. Question number 18, 17. Yes, look at this. Look at this, exactly what they have done. 1,12,500. Then allocated for 1,50,000, 1,12,500. Given in the question, this is what I told you. 0.75, yes or no? So 1.125 minus 0.75, 0.375. So whatever that answer you got divided by my 1,50,000 will give you 0.375. Please check. The variable overheads divided by 1,50,000 should give you 0.375. Are you getting 0.375?
Yes, sir.
Yes. Clear, all of you? That is the variable overheads per can. Then direct wages per carton. Yes. So 36 rupees divided by 24. I told you all of this you should divide by 24 cartons. Yes or no? Yes. Cost of making one empty can. You take all the costs. Okay. What are the cost savings you need to do? Is it clear, all of you? Yes. And if you procure it from outside, what is the cost? They have given that also. Compare the two. Is it clear? Yes. Compare the two. Right? So the cost of making one empty can is so much. Cost of per can of X without empty can. Right? Right? 20, 10 and 10. This is the cost for empty can. So without empty can, this is the cost saving. So 0.6375 is the cost saving. Is it clear, all of you? 0.6375 is the cost saving. What is the purchase price they've told? What is the purchase price? ಇಲ್ಲಿ ಕೊಟ್ಟಿದ್ರಲ್ಲ. 0.675 is the cost for purchasing. Yes or no? 0.675. I am saving 0.375. So therefore, it is better to manufacture or to procure. What do you think? It is better to manufacture or to procure. I am saving 0.6375 if I procure. Okay. And my procurement cost is 0.675. Should I manufacture or procure?
Manufacture.
I am saving 0.6375. I have to pay 0.675. I have to pay more than I save. Will I pay?
No.
No, sir, JVC.
I will not procure.
We can
There's a simple thing.
manufacture.
You don't have to. Actually, if you ask me, this is sufficient. From this, you can compare with 0.675 and directly give the answer. Did you understand? Directly, you can say, since the cost saved by procuring is less than the cost of procurement, the company should manufacture. Simple. This is not required. This table is not required. Is it clear? Right? Then they've told you evaluate the profitability at each level. That's all. So for 25,000, 75,000 cans, you use the same margin costing statement and find out. Is it clear, all of you? Yes. So the remaining part you should be able to do it. That's it. So with that, we can conclude today's session. All right, so we've covered all the chapters comprehensively. Okay, at least the concepts, so definitely we have covered everything. I'm not compromised on any of the concepts. Different variety of problems and different type of problems also we have seen. These are not, I'm not saying these are the only type. Please go through everything that is done in the class, right? All the homework problems which I told this is important. All of those are also required. Clear, all of you? Ensure that you have covered the entire study material. Do not miss any question of the study material. Yes. Study material, recent examination questions, most important. And then you can come to the concept based case scenarios. Case scenarios, why? Because it gives you comfort. It gives you comfort when you do the case scenarios. Clear, all of you? Yes. Because if I've done that case scenario and the same thing comes in the examination, it gives you a lot of comfort. Okay. There is also a case scenario booklet if you want. In the ICI website, there's a case scenario booklet. You can go through it. That's it. Okay. All the best to all of you. Yes, study hard, study well. Okay. Any doubts are there, you can always ask me during the regular classes also. Okay. All the best. Thank you, everybody. Bye. If anybody has any doubts, you can ask. Otherwise, we can conclude this session. Any doubts? That's it. Thank you, everybody. Bye.
Thank you, sir.